Hey guys, happy Saturday, November 16th. It's been an exciting last 2 weeks for GameStop traders as the stock pushed upward relentlessly, smashing through resistance after resistance. Hopefully you guys made some money over the last couple weeks. I want to talk with you in this video about how I traded GameStop last week, and we're going to talk about that bearish engulfing candle that we ended with on Friday and what the chart is telling us about probabilities going into next week. Let's get right into the video. Welcome to the channel, guys. If this is your first time here, just so we're all on the same page as we go through all of today's information, I am a swing trader of GameStop since July of 2022 when the company did a 4-for-1 forward split. I recognize that there are people that think this stock has a potential to short squeeze. There are other channels that provide you guys that entertainment, and you can go to them if you want that sort of entertainment. We're here to talk about trading. I am not trading GameStop as a short squeeze play because as we can see in the center of this web page here, the short interest is 8.47%. The white lines in this bar chart here show the declining short interest over time on GameStop. In addition, when we look at the cost to borrow for GameStop, it costs almost nothing to borrow shares to short on GameStop, and there are plenty of shares available, which tells me that there are not really that many shorts interested in getting into the GameStop play at this moment. This is part of the data that I use to drive my own trading decisions. You might not want to use that data. I know some of y'all are listening to people without any evidence who tell you there are billions or trillions of naked shorts. And all I'm going to say is we've been in this game, what, for now 2-3 years? If things don't work out the way that they are telling you, you can go have a chat with them when everything is all said and done. This is part of the data that I use to drive my own trading decisions, a realistic view based on market data of the short interest and the cost to borrow, in addition to understanding the financials and the fundamentals of GameStop and looking at the chart. I know some of you guys don't like this data if it doesn't tell you what you want to hear. There are people out there on social media who tell you, ignore the data, it's fake. There's billions or trillions of naked shorts. All I'm going to say to that is, where is the evidence and how right have they been over the last 2 or 3 years? Remember, when we started looking at GameStop in 2020 and 2021 with Roaring Kitty, he was using this data. You can't just disregard the data on those days when it tells you something that you don't want to see. On the bright side, the shorts really want nothing to do with GameStop at the moment because of the cash on the company's balance sheet. With the most recent cash raise, $4.6 billion. The shorts bankruptcy thesis for GameStop is dead. However, there will be more shorts that re-enter this play the farther away the price gets from its fair value. Why would they be doing that? Because the company has generally declining revenues. On trailing 12 months, the company has a negative 32 million of operating income and only 12 cents positive earnings per share thanks to the interest that the company is earning off of that cash on the balance sheet. That puts GameStop in a position of having a sky-high PE ratio, 315 forward PE ratio, completely disconnected from reality or from any of its peers, meaning that the company is currently overvalued at the current price based on estimates, expectations from the market of the company's earnings over the next 12 months. Now that story could change if GameStop posts a big profit in Q3 or Q4. We've got earnings coming up soon. We'll get our next look at GameStop's earnings in about 1 month. And when it comes to that cash on the balance sheet and the interest that the company is going to earn from it, I did the analysis for you guys a few weeks ago. I'll put a link right up here at the top of the screen. That interest is still not enough to justify GameStop's current price. GameStop needs an announcement about an acquisition or a merger or some investment, maybe we'll hear about in the future, where they put that cash to use to generate earnings. That is what is going to give GameStop a sustainably higher price, potentially. I know there are people out there telling you guys to focus on book value. They're telling you that because they have nothing else to talk about, and it's a very uncomfortable topic for them to talk about the PE ratio being so high, the falling revenues, and the lack of earnings. So they talk about the one thing they can talk about. The problem is you don't hear one professional analyst or anybody in finance or accounting analyzing a company's forward price potential based off book value. Somebody trying to convince you guys to value GameStop at 5 or 10x book by looking at other companies is going to be detrimental to your investment in GameStop over the long term, in addition to it being disingenuous and dishonest. And I'll leave you with this on that topic, and go do your own work and fact check me. When you see somebody trying to analyze other companies' book value, they're trading at 10, 20 book, and saying therefore GameStop should be, ask yourself why they don't go look at the earnings and the PE ratios of those companies, because you will see in most cases those companies are trading at very reasonable valuations of their price to earnings. And these social media folks don't want to show you that because it blows their whole theory out of the water and exposes GameStop with a PE ratio over 300 of being vastly overvalued at its current price. I hope, like many of you do, that Ryan Cohen finds a great way to invest that cash on the balance sheet and generate real earnings for the company to justify a current price. And then we can have a regular PE ratio to talk about real earnings to value the company on. And then watch what happens if that does occur. If Ryan invests that money and generates earnings, nobody's going to talk about book value anymore. And that is going to be your evidence that this whole time, the book value talk was a complete farce. I don't know about you guys, but I look forward to that day where we can shift the conversation where it should be, talking about real earnings for GameStop, hopefully, and a regular PE ratio that justifies the price. And then we can have certainty about what is going to happen with GameStop's share price. Speaking of share price, let's shift the conversation to a little more fun topic, the run up on GameStop over the last couple weeks. It closed Friday at $26.59 with the high on Friday of $28.59. A beautiful run up. And I hope you guys made some money and took some profits off the table along the way if you are swing trading GameStop. GameStop smacked up against this supply zone here on Friday, this supply zone having been set in July, and it rejected back down off of that. And now we're stuck with a bearish engulfing candle, and it looks like it wants to roll over into next week. Anything though could happen next week. There are some positives here on the chart. The ticker is trading above all of the moving averages that I track on the daily basis. The MACD is still in good shape. The RSI is telling me that the price is a little bit overbought. And with that RSI being overbought and that bearish engulfing candle on Friday, I'm going to say that the probability is that the stock is going to trend down into next week. I've been telling you guys over the last several months that as a swing trader, my ideal entry on GameStop in this current pattern that we're in would be to buy down in this demand zone. And I bought a couple times at $19.50 or so, and then sold into the run-ups off of that. The other thing that I look for swing trading is a breakout above a supply zone. And we did have a breakout above supply zone 2 here, breaking over $25. And I did buy GameStop last week as it was breaking through that. And my plan was to ride the stock up and see if we could retest this supply zone. However, as I executed on that plan, things were looking good on Monday the 11th. Then the price started dropping on the 12th, and it dropped some more on the 13th. And I exited the play, limiting my gains because I missed out that nice run up on the next 2 days. So I did make a profit, but I left money on the table. I'm not holding GameStop long enough to sell covered calls on it. I don't have any strategy to convince you to do. I'm just talking here about how I'm trading GameStop. Maybe it will be useful to you in analyzing how you're trading it. Maybe it won't. Maybe you're a buy and hold forever person. Doesn't really matter to me. But the people that made money this week were the ones selling covered calls. And I heard Richard Newton talking about the people that were selling covered calls were probably nervous as the price push up. I doubt it. I doubt it. People that are selling covered calls generally know about the supply zones, about the resistance areas, and they are trying to make incremental income because they know the price is likely to reject somewhere up there around $27, $28, $30. And that is just incremental extra income for them if they are selling covered calls. And although I'm not selling covered calls in GameStop, I do sell covered calls on a lot of other tickers. And I can tell you that people that are selling covered calls, generally when they pick their strike price, that is a strike price at which they are willing to exit the play if their shares get called away from them. And so they get to get the gain from selling the covered call plus the gain exiting the play at their strike price if it reaches that. And generally, they're going to be happy with both of those. There's really nobody selling covered calls that's nervous that the price might reach their strike price. And if you are that person, if you're worried about a MOAS and you're selling covered calls and you're getting nervous that the price might run past your strike price, I would ask you to reassess, are you the right person to be selling covered calls? Because if you're planning on a MOAS, that's probably not the right strategy for you. If you're a regular trader who's just looking at the chart, looking at resistance levels and trying to maximize your gains on this ticker, maybe while you're holding the stock, then make sure you're picking covered call strike prices at which you'd be comfortable exiting the play. I reject this notion that there are people nervous that the stock was running up to a certain strike price because they had covered calls up there. Those are the smart traders. The covered call people made a killing this week. If you're buying calls because you're expecting a massive run up, my general strategy for myself is if I am in the green on them, I will take some profits off the table. And if I think it still has room to run, I will let some of those calls keep going. But capital preservation is important. You don't want to buy a bunch of calls and then have everything run to zero. If you're in the green, consider taking some money off the table as a potential strategy to employ and play on the house's money. You can see my trades here from this week, the buy at 24.66 and selling at 25.35. A small gain for the week, not really anything to brag about. But as the price topped out on Friday, I was looking at the max paying $23 and looking at the chart, and I said to myself, this thing is going to roll over and end up down on the day on Friday. I did buy puts on GameStop using that thought process, and I made a little bit of incremental extra income on GameStop as it faded away on Friday, buying those puts at $1.68 and selling them for $2. Again, really not much to brag about. It would have been something to brag about if GameStop had fallen all the way to $23. I still had a week left on those puts. They don't expire till 11/22, but as we know with GameStop, anything can happen over the weekend. If Roaring Kitty comes back, this thing could blast off on Monday morning. I had a small gain on those puts at the end of the day on Friday, about 1 minute before the market closed. I went ahead and locked in that gain. I have all my cash back, and next week is a new week, and we'll see where it takes us. If GameStop starts running, I'm all in cash. I can jump in. And if GameStop starts coming down, I have no exposure holding a position on GameStop, and I can just wait and see what transpires over the next week or two and try and find a new good entry for whatever happens next. I'll be crossing my fingers again this weekend that Roaring Kitty decides to come out of hiding. That is the best thing that could happen to GameStop to keep it at this price level. Go watch my video on the fair value assessment of GameStop to understand why I consider it a very speculative play at these price levels. And you must be very careful trying to buy GameStop at these prices. The likelihood is that the price will go down. However, if you want it to go up, if you need it to go up, I certainly hope that happens for you. And if it is running next week, you can be certain that I will be playing right along with you. For me, the name of the game is capital preservation. Minimize or don't take losses if you can avoid it. Make sure you're getting smart entries and make sure you're taking profits along the way. That is my game plan as a swing trader. Let me know your thoughts about GameStop. What do you think is going to happen next week? Did you make any money this previous week? Drop me your questions and comments down below. I love to hear from you guys. Thank you for watching. I am Tony Denaro, and I will see ya on the next video.